Are you feeling a pinch? Consumer confidence took another hit in October, painting a picture of economic unease for many Americans. This marks the third consecutive month of declining confidence, and it's largely due to a combination of a softening job market and persistent inflation. This information comes from a report by Mary Cunningham, a reporter for CBS Money Watch. The University of Michigan's October Sentiment Index, released on Friday, revealed a 1.5% monthly decrease, bringing the index to 53.6%. While it has slightly recovered from a three-year low in April, it still lags behind its January 2025 level. Experts suggest that vulnerabilities in the U.S. economy are the primary cause, with different income groups experiencing varying degrees of impact. The lower to median end of the income spectrum are increasingly concerned about job prospects and income prospects, and that is weighing on their morale at a time where prices are rising, explained Greg Dacko, EY Parthenon chief economist, to CBS News. So it's really an affordability issue. This crucial index monitors Americans' views on various economic aspects, including the job market, wages, inflation, business conditions, and personal finances. It provides valuable insights, especially since it offers a perspective on consumer behavior. But here's where it gets controversial. Inflation expectations edged up in October, indicating that high prices continue to weigh on Americans' minds. According to Joanne Shu, director of the Surveys of Consumers at the University of Michigan, the rise in long-run inflation expectations from 3.7% to 3.9% was primarily driven by independents and Republicans. Inflation and high prices remain at the forefront of consumers' minds, she stated. Interestingly, the government shutdown seems to have had a minimal effect on consumer economic outlooks. Only about 2% of those interviewed by the University of Michigan spontaneously mentioned the shutdown in October, compared to 10% in January 2019, when a government shutdown lasted for 35 days, according to Shu. The CPI data showed that inflation climbed at an annual rate of 3% in September, which was lower than economists' predictions but still above the Federal Reserve's 2% annual target. This inflation reading will play a significant role in the Fed's federal fund rate decision next week. Edited by Alan Schurter and Anne-Marie D. Lee. What are your thoughts? Do you agree with the assessment of consumer confidence? How are you personally feeling the impact of inflation and economic uncertainty? Share your thoughts in the comments below.